And when you have a currency that you don't trust, what do? Well, if you have a banking system you don't trust, what do? You buy precious metals. In India, they've been buying gold, forever. Same thing with silver. So I think that's where probably more demand will come in. Russia seems to be a bigger player in the gold market than the silver market. China is new to it. The Saudis, they could be the wild card. I think the Saudis are going to make a big push in mining. And you look at the Middle East over there right now, Dubai. I mean, I've been hearing a lot of stories that Dubai wants to back all their banks in physical gold.
Hello everyone and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and before I announce my guest, just a reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy, sell shares, products or services. Always do your due diligence and consult with your financial advisor. If the interview is a paid promotion, it will always be disclosed in a disclaimer and marketed as a paid promotion on the platforms where the video is published. That said, I'm delighted to announce my next guest, Thomas Parilla. Thank you for coming to my show. It has been almost a year since you were in my last time here, so a warm welcome to you.
Hey, good morning. Thanks for having me.
Thank you very much. Thomas, let's start, of course, with gold. The gold is always a hot topic to discuss. In recent interviews, you mentioned a perfect storm for gold and silver in few of your recent interviews, including in my own. Can you elaborate on the geopolitical economic conditions creating this environment?
Yeah, I think at the time when I made those comments, we were running into a situation where you had Israel and Gaza, Yemen were all at it, Iran was at it, you had Ukraine, Russia problems going on. So the whole thing was kind of coming together at the same time. Simultaneously, you had countries all around the world who were starting to try to find ways to get around the dollar and around sanctions. And that led everybody to gold. Not as much silver, but to gold. So I think we're still in that period. I think geopolitical problems have cooled down just slightly while Trump's on this trip to the Middle East. They're going to flare back up. It doesn't seem like we can get away from them. So I think there's only one way forward, and that's going to be, people are going to go back to precious metals, so gold and silver. I think silver will have bigger upside, but you don't know when that's coming. Silver just kind of does its thing. And if you turn your back on it, it's going to go from 30 to 50 and then 50 to 100. But if you think it's going to do that tomorrow, good luck. Flip a coin.
Yeah, agree, definitely.
Gold,
But Thomas, what key factors are currently driving the price of gold, and how do you see it evolving in the next 12 to 18 months? I know it's a long period, but how do you really see it going forward?
12 to 18 months, you can't lose. It's a no-brainer. Buy all the gold you can get and just stick it away and hold on to it. Short term, we're just getting giant swings with the tariff issues going on. One day you'll get a trade deal signed and gold will go down $75, $100. The next day something else happens and gold bounces back up 50. There's some interesting things going on in the gold market. I was just looking at these numbers this morning out of the COMEX. The deliveries coming out of the COMEX is really fascinating. At first, everyone thought that was Basel III, and now they're finding out it's not. But these numbers are staggering. Year over year, January, 209% higher deliveries from last year. February, 269%. March, 220%. April, 257%. And then in May, we're only 16 days into May, we're 718% higher than the deliveries a year ago. So where's the gold going? That's the question people are asking right now. If it's not Basel III causing this, who's the buyer? Berkshire Hathaway, that's a rumor that's been floating around a little bit. Maybe they're the secret big buyer. I kind of lean somewhere else. I think this audit for Fort Knox that has been delayed now, and they're kind of letting it quiet down, I don't think the gold was there. And I think they're replenishing it. So my guess is these giant deliveries are coming in. They're either going to West Point to the gold there, or they're going into Fort Knox and getting ready then for the audit. That would be my guess. It could be Berkshire Hathaway, somebody large like that, but my guess would be probably Fort Knox. But when you see those kinds of numbers, I mean, 16 days into a month and you're 718% higher year over year, that's a big number. Something big is going on there. What I think people need to understand is you've heard that saying your whole life, follow the money. But are people doing it yet? I mean, if you wait for this thing to blow apart and then we have a monetary reset and then you try to buy your gold and silver, you're not going to get it. So you need to be in there accumulating now. And I see things going on like in the bond markets right now, and this is globally. There's just red flashing signs out of the bond market right now. The big ones, probably the UK, Japan, USA. And the problems you have, like in the United States, we've got $7 trillion worth of debt that's going to have to be refinanced this year. So that money's coming due. Now, you had lower interest rates when you had that debt initially. Now you have to refinance it at a higher rate. Budget deficits are going to just explode. So that's going to be a big problem. Every country that's got a fiat currency, I think, is now going to have a bigger budget deficit problem as they refinance the debt. The U.S. has got a huge problem there. I mean, Trump is looking at a mountain of debt coming due that he's going to have to refinance. And you can, if you want to play conspiracy theory, you can say that they went out of their way to try to set Trump up by having this wall of debt come due just as he came into power. You look at all the other years, I mean, this is a big one, $7 trillion. So that's the thing I would kind of keep an eye on. I think the only way you're going to get out of that mess, quantitative easing is going to come back. Central banks are going to have to print in order to go ahead and take care of this. It's the only way they're going to be able to go ahead and refinance their debt. And when they do that, they're going to dilute their dollars even farther down, and gold should go higher. I looked at some numbers on the dollar, the way it's being devalued, the U.S. dollar. Typically, it's been devalued at about 9.5% a year. And if you use those numbers, in 25 years, it goes to zero. It'd be 2057. But I think that those numbers are going to accelerate. And I read this from one of the other economists out there. He seems to think that number is going to go from 9.5%, maybe as high as 20% fairly soon. And if it does that, then the dollar goes to zero in 16 years, 2041. And that's the question you've got to look at. If you're a long-term investor, how can you possibly hold dollars? And you're looking at this saying, in 16 years, it's possible that it's going to zero. If you're going to hold dollar-denominated assets, they're not going to be worth anything. So you've got to get out of that. You've got to buy hard assets. You should be buying them now. So maybe you don't want to buy gold or silver. Okay, go buy land. Buy something, hard assets that you can hold and keep and not have it be devalued by the dollar. I think those people will be the ones that will ride it out just fine. But if I had to guess, we're going to see quantitative easing come back for sure. There's no question about it. There's no way around it. Especially in the United States right now, you've seen a lot of countries that are just kind of running away from our treasuries. China, I think, has done it kind of quietly in certain areas, but I mean, I think they're all trying to unload treasuries, unload the U.S. dollar, and replacing it with gold. And that's the strategy. Get rid of the depreciating asset and grab something that's a hard asset you can hold long term. And that trend is probably going to accelerate. Whether the BRICS, really come together as a team and attack the dollar, it doesn't seem like they're at this point capable of doing that. There's too many fractures inside of the BRICS, I think. So that's not my biggest concern. I just think, honestly, I think all on its own, the U.S. dollar is imploding. It doesn't really need help. And it's our own fault. I mean, the second we went to a fiat currency in 1971, you knew that it was a ticking time bomb. You just didn't know how long it would take to happen.
Yeah.
And I think we're getting closer to it. So, yeah, I mean, as far as a perfect storm goes, I think we're still in that area. But I think there's still time for investors to load into their portfolios, and they should. Get physical gold and silver and do just what these guys are doing. You see the COMEX, they're delivering out physical metals. Why wouldn't an individual do the same thing? If you buy your metals, demand delivery, hold them yourself.
Yeah. Do you actually, Thomas, believe that the retail has even entered the market? I mean, this is driven by central banks. It's obvious. So do you see the next move that could trigger even higher gold prices? Are the retails piling in and buying physical?
For whatever reason, retail buyers always seem to be the last ones. And you look at a cartoon; they're always depicted as sheep. You feel bad because it's demeaning to them, but it's true. And again, they don't listen to the lessons they were taught their entire lives. Their whole lives, they've heard that same saying, follow the money. Now, if these central banks are in there buying like this, and they've been doing it for a couple of years now, why wouldn't you do the same thing? I mean, they're sending you a signal. Something's wrong with the financial system, and we're going into hard assets, so why wouldn't the average person do the same thing? It just makes perfect sense. I think the retail investors will be the last. But you saw a little shift in China when they opened up for the insurance agents, agencies, the insurance companies that start buying gold. You saw a huge amount of gold buying come in just from that. You'll see that again when the retail investors, especially here in the West, start to buy another big chunk. So I don't know where gold is right now. This morning it was like 31.74. I still think if you look out 12, 14 months out from now, I think there's a good chance you see gold in the 5,000 range. I'm keeping my models for silver, I think, in that same time frame around 100. For whatever particular reason, my models have been off by about 60 to 90 days on every one of them. I think a year ago I put out a model that said gold would be 3,100 by the end of January, and same thing, I missed it by about 60 days. So my models are just guideposts for discussion's sake. If you're trading off of somebody telling you gold's going to be up at an exact amount over that period of time, you're going to lose money. But if you look at the direction you're heading on a overall trend, you can't lose. And I would say gold a year from now at 5,000 would make perfect sense. I know it's about maybe whatever 40. Right now you're talking about a 2,000% move. It's a good size move up, but going from 1,800 to 3,000 was a big move up too. So I think just stick to your plan. Just keep stacking, keep accumulating monthly if you can. And if you want to make some larger purchases, do it and just demand delivery out in your hands.
Yeah, that's a good point. And you emphasized buying dips in gold as a strategy, as I remember. How do you identify those opportunities, and what signals should investors watch for?
I think I would stress to people, for the average person out there, I would say buy monthly and don't worry about the price, higher or lower. And then if you get a dip, then that's the time maybe you'd want to buy a little extra. But for the most part, I would say just stick to a plan where you say systematically every 30 days, I'm going to buy so much gold, so much silver, so much platinum, and I'm going to hold it. And if you happen to get a big correction where maybe gold goes down 10%, 15%, maybe you want to make a bigger purchase than you do. But for the most part, I'd stick to a systematic plan and try to take some of the brain work out of it and just accumulate. Just stack and accumulate. You think about it here in the United States, say, I'm 60 years old, say if my father had been doing that since, say, 1971, every month just simply stacking gold. Where would you be at today? 50 years later, you'd have a mountain sitting there. Would you rather have that or a mountain of dollars? The dollar lost 98.5% of its purchasing power since then. Gold hasn't. So I think the proof's in the pudding when you look at the numbers. I mean, what you could buy for the amount of gold, if you bought $1 million worth of gold back in 1971, what could you buy with that today? Mansions. Multiple.
Yeah. Thomas, how do you balance investing in physical gold versus gold securities like ETFs or futures, and what are the pros and cons of each?
I don't balance it very much. I use a 90-10 barbell approach where 90% is in physical metals, 10%. I don't use ETFs. I like to buy exploration miners just because I enjoy it and I think the upside's bigger. But mainly I enjoy it. I like reading drill results. I like looking at companies that are proving out their properties. And that's one area there I think is going to become explosive if you like to buy stocks, is the exploration miners. Because if you look at some of these companies like Barrick, they've had declining production for 20 years. So that can't continue. So they've got to go out and find new supply. So up there in Canada, the Golden Triangle, I love that area. They're starting to prove some properties up there, and the drill results that are coming in are just fantastic. Now you got Sprott, McEwen, you got Newmont, you got all the big guys all up there. McEwen seems to be all over the Golden Triangle. So I think that's what you're going to see in the stock side. I think exploration miners will be the hottest ticket. But I mean, even if a guy just wanted to buy one of the larger ones like Newmont, why not? I mean, I would buy that probably over an ETF. If I was going to buy any ETF at all, I'd probably buy Nugget because that's the two-time leverage fund, NUGT. I would probably buy that one if you didn't want to buy individual ones. And for the average guy out there who doesn't want to spend the time doing a bunch of research, because I tell you, you do have to do a lot of research when you're looking at exploration miners. For that guy to buy a fund makes sense. It's simple, it's easy, he buys it. Now the two-time leverage fund, you better be used to the volatility because you might get 7 to 10% moves pretty regularly on that. But yeah, that'd be the strategy I use. I use a 90-10 barbell. I want to keep the bulk of the money. Your really important money is going to be in physical assets, and then the 10% I'd use for, I use it for the miners. You could use it for the ETFs, but for that.
Yeah, as I remember, you liked and still like Goliath resources, and you highlighted Juggernaut exploration. What criteria do you use to select these companies? Beside, okay, you mentioned the Golden Triangle jurisdiction is important. What else?
For me, it's drill results. I mean, Goliath, their drill results are just off the charts. They're fantastic, and that's the main thing I want to look at. I want to see physical evidence of what they're proving out on their property. Where's the gold out? How deep is it? How easy can you get it out of there? Is it feasible to get it out of there? Also, then I want to look at management. I mean, who's running the show? Do I trust them? Have they diluted their stock into the ground? Or are they a guy who does a reverse split every 2 years? Because I don't want to touch any of that. Now, Goliath, you got Roger Rasmus. I mean, he's a fantastic CEO. He's doing absolutely everything right. And he's a guy who is a global CEO. I mean, if you go over to Europe, Roger Rasmus is a very well-known guy. I can't tell you how many messages I get from guys from, Germany, France, Sweden, Switzerland, and they know Roger extremely well. So in that particular case, he's got a lot of eyeballs on him. I know he's got a group out of Singapore that did some funding for him, but I think the guy that seems to be in the lead right now is the guy that might buy him out would be McEwen. And that's what I think. I think you'll go through one more drill season this year, and then I think next year is when you're going to start to see the buyouts come in. Goliath still thinks that they've got at least a $2.5 billion property at buyout. And that's, depending on how the dilution goes between now and then, I would imagine that's a $12 to $15 stock when you get out that far. Now, Juggernaut is the sister company right next door to them. Their properties butt right up against each other. The initial drill results on Juggernaut are actually better than Goliath. And Dan Stewart, the CEO there, same thing. Just an absolute stand-up guy, a great CEO. Now, the advantage to Juggernaut, their costs are about 30% lower than most exploration miners because they share drill teams and geological teams with Goliath. So the fact that you're able to share those things, you cut your costs way down, it's really a huge advantage because if you are an exploration miner, if you can keep your costs down, you don't have to, dilute your shares by selling shares for funding, and that's a great thing for the shareholder. So yeah, I mean, those are the two main companies I like up there. But honestly, there's probably maybe 6 or 7 really nice companies up there you could buy in the Golden Triangle. Just make your own small mutual fund if you wanted to.
Yeah, and they are all low market. They are all juniors, right?
Yep. Pretty much every exploration miner you're going to find is going to be a junior because they haven't gone into production yet. So you're not going to see revenue. You're not going to see earnings. What you want to watch for, you want to look at their market cap. You want to see what kind of a share structure they have. Do you look at it and they've got 1.2 billion shares? Okay, well they're going to reverse split the stock. So you look at is the CEO being good to the shareholders, and that's the thing I want to look at. So first I look at the drill results and I say okay, I like the property. Then I look at the management and I say okay, good quality management in place. Then I make the decision, okay, I'm going to start to buy the stock. So I kind of go through my own criteria on it, how I do it. But I mean, that's how I do it. First, I want to look at the black and white drill results, and then I want to look at the share structure, and then I go from there.
Okay, yeah. Let's talk a bit about silver. How big is the disconnect between the paper silver market and the physical market in Europe?
Big, yeah. That's silver's another one of those deals where there's a major shortage in silver that is coming, and it's not priced into the stock at all. If you look at physical silver, it's not priced into it even slightly. Right now, silver this morning I think was a little over $32 an ounce. It probably should be closer to 100 right now. It just there's a disconnect there. My experience with silver, it's frustrating to the point where you want to throw your computer through the wall sometimes because it doesn't move, it doesn't move, it doesn't move, and then all of a sudden in like a 30, 60-day period, it just explodes. And if you're not already in it, you're chasing it. And why would you want to do that? So in silver's case, you got to be more patient. But I think it kind of gives you a gift. I mean, it gives you the chance to accumulate down here when everybody isn't diving in buying it. I mean, right now in gold, you're fighting the central banks. You're trying to buy at the same time these big whales are in there buying, and they're pushing the price higher. Silver, so far, they haven't done it. Now, I'm hearing stories that the Chinese are beginning to accumulate silver the same way they accumulated gold. And if that's the case, you're going to start to see more explosive moves come in the silver
You
market
mean
as well.
Chinese, the big boys or the retail
The government, yeah, yeah.
government?
Yeah, yeah, just the same way the central bank in China, the way they've been bringing gold in. What I'm hearing is they're starting to accumulate silver the same way. So I think the Chinese want control of all the pricing in metals. They want to destroy London and New York, and they want Shanghai to control it. So I think that's how they're going about it. If they can accumulate enough of the physical metal, then it gives them some control over the pricing, and then they can break the hold that London and New York have always had over it.
So, are you more bullish on gold or silver, Thomas?
Silver is going to give you a better long-term return. It's going to be much more explosive on the upside, but it may lag and lag and lag and then explode. Whereas gold, I think, is going to go. So I would say I'm probably more positive on gold right now, but silver is going to give you a better long-term return.
Okay,
So
okay.
I would still split your holdings. Most people, I would tell them split your holdings in thirds. One third into platinum, one third gold, one third silver, and just make it a no-brainer. Don't try to guess which one is going to be the hotter one or which one's going to be hotter today or tomorrow. Just split it and accumulate. But between all three of those, silver should be the best performer long term, but it may be a horse apiece. I mean, if gold goes to 5,000 and silver goes to 100, I mean, you're talking about silver going up about 200%. So you can see the percentage returns much higher. But I still would split it. I think it just makes sense to do that.
Yeah, you mentioned silver is going to China, but where else? Where do you expect? From where do you expect global demand from for silver? Do you see it maybe Russia, India?
Yeah, India. Yeah, I think demand for gold and silver in India is has always been strong, and I think it'll just continue to be. But I think they learned the lesson probably Americans are going to learn. When you have a currency that you don't trust, what do you do? Well, if you have a banking system you don't trust, what do? You buy precious metals. In India, they've been buying gold, forever. Same thing with silver. So I think that's where probably more demand will come in. Russia seems to be a bigger player in the gold market than the silver market. China is new to it. The Saudis, they could be the wild card. I think the Saudis are going to make a big push in mining. And you look at the Middle East over there right now, Dubai. I mean, I've been hearing a lot of stories that Dubai wants to back all their banks in physical gold. And they see themselves as becoming a financial hub of the world. And I'll tell you what, if that's the case, if they go in there and they back their banks 100% in gold, they're going to attract a lot of assets. Because I tell you, here in the United States, our banking system has held on and held on under a lot of stress the last 3 years. I mean, you're sitting there right now. Our banking system, I think, has at least between 5 and 600 billion in unrealized losses, and I think that's understated. I think it could actually be closer to $1 billion. But our commercial real estate market was just being devastated the last couple of years, and so you've got right now these banks are sitting on a lot of bad loans, and they're holding them and modifying them with the hopes that the economy is going to pick up. Maybe Trump gets these tax cuts in. And that spurs the economy, and then the loans are okay. But our banks, for I guess forever, have always used that pretend and extend idea, where they make a bad loan, then they go out. They don't want to count it on the books as a realized loss, so they just modify the loan, keep it in place, push it out, and they hope, okay, maybe 2026 the market turns and we'll be okay. Now, if you don't, you've got an avalanche of bad loans coming in on you, and then who gets stuck with that? The U.S. taxpayer.
Yeah. Thomas, are there any other metals or commodities that you are excited about in the current market cycle? I don't know, maybe copper or strategic minerals.
Yeah, copper's another one of those things. I think you're going to have a shortage in copper. So yeah, I think copper's more economically sensitive. So if you see the global economy begin to pick back up, things start to move, then yeah, I think copper would be a big winner. It's very hard to hold physical copper, so you have to you'd have to trade that in a way. So you probably would in that case have to use paper markets to do it. If you were going to accumulate physical copper, I mean you'd need a warehouse. But I think so. For me, I think I kind of concentrate my efforts more along the lines of just gold, silver, platinum. I know the last time we talked, uranium was just beginning to turn red hot, and you'd asked me about it. I said, no, I don't really do anything in it, and I still don't. But, hats off to Sprott. I mean, Sprott and those guys were all over it from day one. And they must have made a killing on it because, I mean, they literally were the first guys through the door. But it's, I stay in my lane. I found if I spread myself too thin across the board, then I show my weaknesses. If I stick to the things that I'm comfortable with that I know, that's where I do well. So I try to stick with where I'm comfortable and what I like to do. But yeah, I would agree with you on some of the other ones. I think you could probably buy a basket of them and they're all going to do very well. Copper and silver are probably going to be a little more economically sensitive. Gold is going to be more of a safe haven. It's an interesting thing about the safe haven part. Boy, I must have got 1,000 different messages from guys. Bitcoin is the new digital gold, blah, blah, blah. And then, of course, you see Pakistan and India, go to war. And what happened initially, right off the bat? They shut the internet down. Now, if that was your digital gold and they shut the internet down, where'd it go? It's gone. So there's no comparison. I think the crypto markets are very interesting as a trading platform.
Agreed.
But not as a store of value. If you can flip a switch and shut it off, it's not a store of value. So to me anyway, I think gold and silver is the tried and true area that people are always going to come back to. Gold is really going to be the main one. And I still say at some point we're going to go through this monetary reset. When that happens, you're going to have a basket of those commodities with gold as the anchor, probably backing the new currency.
Yeah. What I'm hearing is that most of the people are afraid. The retail. We talked about the retail in gold. They're mostly afraid that the big financial reset is coming. The stock market's meltdown, and that they will be able to buy gold, silver at 50% at 50% less than current levels. How do you address that?
Nonsense. That's. If a person's sitting there right now hoping that happens, good luck. It's not going to happen. All they have to do is simply pull up the United States debt load and look at it and say, okay, do you think the debt load's going to go down by 50% because of this monetary? The whole idea initially was some kind of a Mar-a-Lago Accord where they were going to offer these 100-year bonds, and guys in Japan and England were going to go ahead and get rid of their short-term debt that was coming due and move it into these 100-year bonds that were fairly low yielding. And that was going to basically help out the United States on the debt. And every time it gets brought up to somebody, one of these countries, Japan, just turned their nose to it and said, no, why? I mean, why would you do that? So I don't see that as anything that's coming down the line. I think we're going to have a monetary reset, but it's not going to be that. It's going to be a change of a currency back to something that's actually where we're backing our currency with something other than just debt.
Yeah. Thomas, you have more than 20 years experience on Wall Street. You are probably still connected with the guys over there. What are you hearing and seeing? What are some trends that Wall Street is engaging in right now in the terms of investing, besides gold?
Well, I mean, on the Wall Street side, I talked to a lot of the guys on the bond desk quite a bit. I'm not sure why, but in my career, I mean, the guys on the bond desk were always much more reliable than guys on the stock trading desk. They were very knowledgeable and extremely smart guys in there. And they all see the same thing coming. I mean, we're seeing less and less buyers of U.S. debt, and that's going to be a real problem when you have more debt coming due. So who's going to buy it? And that's what they're all saying. Who's going to buy it? And that brings me all the way back to, circle back around to quantitative easing. It's got to be quantitative easing. And when you think about this, we're going to teach this in economics classes for decades after it all blows apart. And they're going to say, look, how stupid that was. I mean, you took United States debt, there were no buyers for it. So I know the Federal Reserve is not the United States government, but it's a close relationship. So then they go in and they print dollars, buy the debt themselves. So you're just simply buying your own debt. It's insane. It makes no sense at all, but we've been able to sell it to the world that it's okay. But it can't go on forever. So, no, I think quantitative easing is going to come back for sure. And I don't see any way out of it. And that problem with that is when it comes back, it speeds up the devaluation of the dollar. So when you're initially saying, hey, the dollar may go to zero 25 years out from now, I think the author that I had read this report about, he felt that we'd probably go to zero in 16 years. That makes perfect sense. Quantitative easing would then speed that process up. And what they've kind of found over over the years, once you begin quantitative easing, there's no way back out of it. Japan found that. Everybody's found that. And then it just compounds itself because you drive your fiat currency into the ground as you're printing more and more dollars. We've all seen those reports about the Weimar Republic, and I mean, look at that. I mean, you had guys who were very, very wealthy families, and 3 years later they were broke if they were all holding German money. To think that couldn't happen here, you're crazy. It's happened in every fiat currency. Why wouldn't it happen here? I think the only way it doesn't happen, if Trump or somebody else steps up and maybe makes a hard decision and says, we're going to reset it now, and we're going to go into some type of a backed currency, whether it's a commodity, a basket of commodities, or just gold. I think you have to do something, and when you do that, then the world will come back around saying, okay, now you've got sound money again, and I think then the dollars flow back to the U.S. But I tell you what, if I was a foreign government, I would be afraid of putting billions of dollars into the U.S. treasuries, watching the government dilute that, our dollar into the ground, because you would have no real assurance you would get your money back out of it. If you bought, the Chinese right now, they're buying gold. That gold's going to be there for a long time. It's not going anywhere. So for them, it's a nice, secure place to put into your treasury. And if I was everybody, I would get rid of my treasuries. I'd get rid of my dollar holdings, and I would hold physical metals inside of that. I think it's the only real prudent decision.
Yeah, what about traditional safe haven currencies like Swiss franc or those kind of currencies? Is that still a good bet, or there is no good bet in paper money?
That's it. You hit it. There's no good safe bet in paper money. Like I use the 90-10 barbell. My 10%, I'm not going to hold that forever. That's stuff I like to enjoy and I like to trade it. But no, I think if it's got any kind of a fiat currency attachment to it, it's going to go to zero. It's just a matter of when it happens. Now, the Swiss have been much better than the United States because that's a country that's kind of been founded in, the gold markets. So they've got a little bit different background than the Americans do. But you learn sometimes by mistakes. So the next generation of Americans that comes up, it might be completely different, where they're going to say, no, they're going to really embrace the gold and silver markets because they're going to understand, hey, this is real money and it's not that paper, garbage that they are handing us. That's a hard thing. You talk to a guy who's like, in his 80s here in the United States, who maybe worked his whole life and maybe worked, 10, 12 hours a day, worked in steel mills, wherever. And you look at it and say, geez, you lost 98.5% of your purchasing power. How can that possibly be okay? Because it happened gradually and they didn't actually see anybody reaching into their bank accounts and stealing the money, they didn't see it. They didn't recognize it. And a lot of times, even now, they don't really recognize that they had 98.5% of their money stolen. But, they did. There's so many reasons people take to the streets and protest. And there's one right there that they should have taken to the streets and protested a long time ago. The fact that really a tyrannical government came in and stole 98.5% of their life's work. I mean that's just absolutely pathetic. I mean you think about it. You know, in America, we always had that that saying, the American way. The whole idea was you were going to leave the next generation a better world than the one you started. And that's kind of what I love about the mining industry. All the miners I know, they're just fantastic guys. I mean, they'll go in and they'll mine a property, and when they're done, they'll go through a restoration. And the rule is you try to make the property back to how it was when you got there. Everybody I know makes it better. I mean, you go back to those properties 5, 6, 7 years later, and you'll see, okay, there's a pond, and there's all the whole, what do you call it, ecological system is all in place. And it's a situation there where you come back, maybe you see a kid sitting there fishing. Now you take other companies. Here where I live here in Erie, Pennsylvania, we had International Paper here for a year, the paper company. Well, now they've got these guys. They're in their 80s, so they're telling the truth. They're being interviewed, and they're saying, "Oh yeah, we were there at midnight turn, 2, 3 o'clock in the morning. We were dropping barrels of toxic chemicals down into this hole right next to Lake Erie. Now, where'd they think that was going to go? Right into the water supply. But they didn't care. International Paper didn't care that when they left town, they left a toxic mess. And see, a miner would never do that. The miners I know, when they're done, you go back to those properties later and they're beautiful. And that's because they're doing the right thing. They're trying to leave a better world for the next generation to inherit. And we've lost that for some particular reason. And I think we need to make a full circle turn and go back to that, where you stop taking shortcuts and you start thinking longer term. And how do I make the world better? There has to be a balance between the environment and business. There's no reason why you can't go in and harvest the metals from the ground, the oil from the ground, the gas from the ground, all the gifts that God gave you right under your feet. You should be allowed to go in there and grab them. But when you're done, make sure you don't harm the land. Take it back to at least as good as it was when you got there. And that's why I love the mining industry. Miners don't do things like International Paper did. They do better. And I think the whole world, should embrace that.
Yeah, well said, Thomas. Let's wrap it up with this. That was president of the Parilla Investment Group, Thomas Parilla. Thomas, great chat as always, and I look forward to host you again soon.
Yeah, thanks for having me. Have a good day.